Yes, people, done. Welcome back after break. So guys, before break, we were discussing about the penalty. Now guys, we were discussing about the penalty before the break. Now, in that penalty, only last 270A penalty, last one part is pending that we are going to discuss. Still in the ICI examination, they have not asked any question on this part. As well as in the CMA Institute exam also, they have not asked any question on this part. गाने अच्छे थे. Yeah, in the morning batch we used to play the song in the break, but in evening batch mostly we not play the song. But in morning batch, yeah, we used to play song sometime. So now guys, all people pay attention. Very interesting part. Guys, suppose for an example, there is a one company, name is Nehal Private Limited. Nehal Private Limited is basically one company. Nehal, just you joined the lecture or what? So Nehal Private Limited is one company. Now guys, what happened? For an example, in case of Nehal Private Limited, your ROI income means as per your written income, your income was 10 lakh. Now, in the intimation 143.1, it was again 10 lakh. Means there was no change. There was no change. There was no change in the income in the intimation. Intimation income was 10 lakh only. Nehal, for some time you will not able to understand. If you join now only, so for some time you will not able to understand anything for the next 5-10 minutes. Approx for the next 20 minutes. After that you will able to understand. Now what happened? ROI income was 10 lakh. Intimation 10 lakh. And guys, in the 143.3 assessment, suppose your income is increased to the 17 lakh. Then can I say that this is the underreported income? And here guys, your underreported income in this particular case, can I say that this 7 lakh is a underreported income? This 7 lakh is your underreported income. Here 7 lakh is your underreported income. Now guys, in case of Nehal Private Limited, this is the company. So MAT is also applicable. Here MAT is also applicable. MAT is also applicable. So guys, what happened? As per the written income, your book profit means MAT. So MAT, that book profit is, for an example, here book profit was 20 lakh as per the written income. As per written, your book profit was 20 lakh. Now, as per intimation, under section 143.1, your book profit was 20 lakh. And guys, for an example, in 143.3, your book profit is also increased. And here your book profit or adjusted total income in case of AMT, that is increased to the, for an example, here it is increased to the 32 lakh rupees. So lawmaker says that this will also be treated as your underreported income. Here in your assessment, if your book profit is increased or if your adjusted total income is increased in AMT, then guys, it will also be treated as your underreported income. So here 12 lakh is your underreported income. So guys, here 12 lakh and 7 lakh total comes to the 12 lakh plus 7 lakh total comes to the 19 lakh. This 19 lakh will be your underreported income. This 19 lakh will be your underreported income. So here in this particular case, your underreported income will be 19 lakh. So Shiva, what I am saying that try to understand. Okay, guys, if your after intimation, your normal income is increased, this is underreported income. But suppose if your book profit is also increased, then book profit is also increased, then this is also called your underreported income. Now, how you will calculate the tax on underreported income? Because here total underreported income is a 19 lakh because 12 lakh plus 7 lakh. So guys, here on 7 lakh, how you will calculate the tax? Here on 7 lakh, how you will calculate the tax? Now in this particular part, they mention little bit different. They mention that here on this 7 lakh, how you will calculate the tax? First, calculate the tax on the 17 lakh and minus calculate the tax on 17 lakh excluding underreported income. So basically, here they are saying that just first calculate the tax on 17 lakh and after that calculate the tax on the 10 lakh. and just reduce that. That will be the tax on the 7 lakh. But how they mention, you know that they mention that calculate the tax on the 17 lakh minus calculate the tax on 17 lakh excluding underreported income. So here guys, your tax, first you will calculate the tax on the 17 lakh minus calculate the tax on 17 lakh exclude except underreported income. So 10 lakh only na. So suppose for an example here tax rate of company is at 25%. So can I say that what will be the tax on 17 lakh? So 17 lakh multiplied by 25% plus 4%. So it comes to the 4,42,000. So here guys, your tax will be 4,42,000 minus calculate the tax on this assessed income except underreported income. So basically 10 lakh. So how you will calculate the tax on 10 lakh? So guys, 10 lakh multiplied by 25% plus 4%, it comes to the 2,60,000. So 2,60,000 is your tax. 2,60,000. So 2,60,000 minus 4,42,000. So remaining comes to the 1,82,000. And here on 1,82,000, there will be a penalty of the 50%. On 1,82,000, there will be a penalty of the 50%. So here 50% penalty is applicable or 200% penalty is applicable. And guys, on this 32 lakh, how you will calculate the tax on this 12 lakh? So guys, it's very simple. First calculate the tax on this 32 lakh. So can I say that on this 32 lakh and MAT rate is a 15%? MAT rate is a 15%. So 32 lakh multiplied by 15% is MAT rate plus 4%. It comes to the 4,99,200. 4,99,200 and minus calculate the tax on 32 lakh exclude the underreported income. So it means calculate the tax on 20 lakh. So here guys, you will calculate the tax on 20 lakh multiply by 15% plus 4%. It comes to the 3,12,000. So 3,12,000 minus 4,99,200. So remaining comes to the 1,87,200. So remaining comes to the 1,87,200. So on 1,87,200, this will be the penalty of the 50. On this penalty of 50% will be applicable. So guys, here they say is that suppose if assessee is required to pay the MAT or AMT, and in MAT or AMT, if your book profit is increased or your that adjusted total income is increased, so that will also be treated as underreported income, and on that also there will be a tax. Now guys, in our module, there is no example. In the CA, they have not asked any example till now, but in the CMA module, one example is given. So I just took this example from the CMA module. Try to understand. So guys, just take the calculator in your hand. Compute the penalty under section 270A in case of X Limited from the following details. So there is a one company called X Limited, and suppose tax rate of that company is a 30%. Assume tax rate of company is a 30%. This is the illustration number 30. Now guys, here they have given the return income, but I assume that this return income is a 143.1 also. Means as per 143.1, this income is a 80 lakh only. So return income is here 80 lakh and your assessed income is 1 crore 20 lakh. So can I say that your income is increase is 40 lakh? Your income is increase is 40 lakh. And your book profit was the 2 crore, and as per the assessed income, your book profit is a 2 crore 10 lakh. So here your book profit is increase is a 10 lakh. So can I say that your underreported income is this 40 lakh plus 10 lakh? It comes to the 50 lakh. 50 lakh is your underreported income. Now how to calculate the tax? It's very simple. So guys, on here, your assessed income as per normal provision is 1 crore 20 lakh. So first calculate the tax on 1 crore 20 lakh. So can I say that 1 crore 20 lakh multiplied by 30% plus health and education surcharge 7% and plus 4% health and education cess. So it comes to the your 40 lakh 6,080. This is tax on the 1 crore 20 lakh, because 1 crore 20 lakh you will consider the surcharge also 7%. And just reduce the tax on 1 crore 20 lakh except underreported income, exclude underreported income. So you will calculate the tax on 80 lakh. So guys, on the 80 lakh multiply by 30% plus 4%, it comes to the 24 lakh 96,000. So can I say that here your tax on underreported income is difference between two, and difference between two is a 4006080. So total comes to the 15 lakh 10,000. That is tax on underreported income of the 40 lakh. Now guys, what will be the tax on this underreported income of 10 lakh? So first calculate the tax on 2 crore 10 lakh. So on 2 crore 10 lakh, MAT is applicable at the rate 15%. So just take the 15% plus 7% surcharge plus 4% health and education cess. It comes to the 35 lakh 5,320. And guys, just calculate the tax on 2 crore. So 2 crore multiplied by 15% comes to the 30 lakh plus 7% plus 4%. Now what is your difference here? Here what is your difference? So here guys, your difference is 35,05,320 minus 33,38,400. So remaining is your 1,66,920 is tax. Now can I say that on your underreported income, your total tax is a 15,10,000 plus 1,66,920. So here 15,10,000 plus 1,66,920 total comes to the 16,76,000. Wait a minute, huh? I made any mistake or what? Here it is a 15 lakh. Yeah, it is underreported income is 50 lakh. Now here 40 lakhs, 24 lakh 96,000. Oh, here I made the mistake. So here guys, difference between both is 4006080 minus 2496. So here 15 lakh 10,080. 15 lakh 10,080. So 15. So here guys, 15,10080 plus 166,920. Yeah, 16,77,000, that is tax on underreported income. And if there is a penalty of the 50%, then this is the penalty, 200%, then this is the penalty. Done. Now guys, there is a one interesting point here. Yes, suppose there may be possibility. Yes, suppose some underreported income is included here also in your normal income, as well as here also in the book profit. There may be possibility. Yes, some income is included here also and here also. Then guys, they are saying that, yes, suppose some income is included here also and here also. Then guys, that income will not be included here. Means only at one place it will be treated as underreported income. I can take an example. Guys, here assessing officer made the addition of 7 lakh. Here assessing officer made the addition of 12 lakh. But suppose there is a 3 lakh rupees addition on the same ground. Same ground means how it can be possible. I can take an example. Suppose as per schedule 3 of the Companies Act, you have prepared the P&L account. And in the P&L account, by mistakenly, you have claimed the income tax of the 3 lakh. Now, income tax of the 3 lakh you have claimed by mistakenly, you have claimed the income tax. Income tax is not allowed in the normal provision as well as in the MAT provision. Now, what will happen here? 3 lakh rupees you have claimed as an income tax. So, first point, this 3 lakh will be added in the normal income also, as well as this 3 lakh will be added in the book profit also. So, can I say that there is an addition on the same ground? So there is an addition on the same ground. So 3 lakh there is an addition, means 3 lakh is included in this 7 lakh as well as in the 12 lakh. So lawmaker says that suppose if 3 lakh is added in the 7 lakh also as well as in 12 lakh also. So in 12 lakh that 3 lakh will not be considered. It means here your underreported income will be, only 9 lakh. Means if there is an addition on the same ground in your normal income as well as the book profit or AMT, adjusted total income, then guys only in the normal income that will be underreported income. In the book profit or adjusted total income that will not be underreported income. So here your underreported income will be only 9 lakh. But now there is an interesting part. How to calculate tax on this 7 lakh? We will calculate the tax in this way only. First calculate tax on the 17 lakh minus tax on the 10 lakh. But guys, how to calculate tax on this 9 lakh? That is the interesting catch here. They are saying that on this 9 lakh, how to calculate the tax? First calculate the tax on the 32 lakh minus calculate the tax on 32 lakh minus except underreported income is a 9 lakh. So here guys, we will calculate the tax on the 23 lakh, means 32 lakh minus 23 lakh. 32 lakh minus 23 lakh. So here I took one example. This is the next example given by the CMA Institute. What this example says. Okay, suppose in the above illustration, out of the addition of 10 lakh made in the book profit and 40 lakh made in the total income under general provision, 3 lakh was made on the same ground. Suppose 3 lakh is addition made on the same ground. So 3 lakh is made on same ground. So here I can say that, okay, guys, suppose 3 lakh is also included here and 3 lakh is included here. So here we will consider only the 7 lakh. Here we will consider only 7 lakh because there is an addition on the same ground. So we will consider only 7 lakh here, and when we are considering only 7 lakh, so how to calculate tax on this 7 lakh? So first calculate tax on the 2 crore 10 lakh minus tax on 2 crore 3 lakh. 2 crore 10 lakh minus tax on 2 crore 3 lakh. This way you have to calculate the tax here. So guys, if you check the solution, how they calculated the tax. So first was very simple. Okay, like they have calculated tax on this like 1 crore 20 lakh and 80 lakh. Difference is like 40 lakh, that is under reported income, as well as here 2 crore 10 lakh and 2 crore 3 lakh. 47 lakh is now your under reported income. How to calculate tax? So first tax was 40 lakh 6,080, that is same. This is same, this is same. But guys, here tax on the, like this is like different. 2 crore 3 lakh. So tax on the 2 crore 3 lakh. So here you will calculate the tax on 2 crore 10 lakh and 2 crore 3 lakh. So whatever will be the tax on 2 crore 3 lakh, just reduce that. That remaining will be your tax. And on this part, there will be a 50% or 200% penalty. So this two example I have given you in the class notes only. So if you wish to read or if you wish to copy down anywhere in your book, you can copy down. You will get in the class notes. Okay. Done. So this is the completion of your penalty part. So still till now, ICAI has not asked any question related to this part D, that is income assessed or reassessed as per section 115 JB or JC MAT AMT. But if any question asked, then that two example is sufficient for you. You can manage that. Okay, done. So this is the completion of your penalty part. Now guys, we are going to start with the prosecution part. Prosecution of the Income Tax Act. Prosecution means jail. Like if you did anything wrong, then there will be a jail also. And guys, for the prosecution part, there are various sections. And for the examination point of view, there is no need to remember every prosecution, because in every section, there is a different prosecution limit. There is a different imprisonment limit. Like first part, section 275A. This section says that if there is a contravention of the order of deemed seizure or restraint order under section 132(2), if you remember the raid, then you know that in the raid we have discussed that, okay, guys, there is a deemed seizure. Suppose if due to the any volume or due to the nature or due to the weight, that asset you cannot actually seize. So that is called a deemed seizure. So in case of the deemed seizure, and suppose if there is a contravention of that order, then guys, there will be a penalty, there will be a prosecution, and that prosecution will be up to 2 years. Means up to 2 years there will be a jail. Along with that, there will be a fine also. Now next part is suppose failure to provide the necessary facility to authorized officer to inspect the books of accounts. Suppose you have not allowed assessing officer or authorized officer during the raid to inspect the books of accounts, then guys, there will be a penalty of the 2 years plus fine. Means 2 years penalty is applicable, along with that fine is also applicable. Now guys, there is a one section. Suppose removal or concealment or transfer or delivery of property to thwart the tax recovery. Suppose for an example, to just suppose you know that government may start the tax recovery. So what you did, you just transfer the property and all. Then there will be a like jail of the 2 years plus fine. Guys, this is not possible to remember all the section. Now just you have to remember the sum section. I am just going to give you the marking of that. Just you have to remember that much. And if you remember that much, that is the sufficient. Don't worry about that. Now guys, first you have to remove the you have to remember the section 276C subsection 1. Now what is the 276C subsection 1? Just put 2 star mark, because there is a one case law on this section. So they may ask you this part. So here this section says that there is a willful attempt to evade tax. Means willful attempt to evade the tax or penalty or interest chargeable or imposable under reports his income. So guys, suppose if there is a willful attempt to evade the tax or penalty or interest chargeable or imposable under reports his income. So here, if there is a willful evade of the tax, willfully you are evading the tax or penalty and all, in that particular case, guys, if your evasion or taxes on underreported income is more than 25 lakh rupees, then there will be a jail of 6 months to the 7 year. Means up to 7 year can be the jail, but otherwise there will be a jail of 3 months to the 2 years. Along with that, they will charge the fine also. There will be a fine. Along with that, there will be a jail. from 6 months to the 7 years, and otherwise there is a 3 month to the 2 year. So what this section says that suppose if there is a willful attempt to evade the tax or penalty or interest chargeable or imposable or under report of his income, then guys there will be a imprisonment, jail. And suppose if your evasion on tax on under reported income is more than 25 lakh rupees, then guys 6 month to 7 year, otherwise 3 month to the 2 year will be the jail. So this is one section 276C subsection 1. You have to remember why, because there is a one case law. That case law is given on the next page. So we are going to discuss this case law. There is a case law of the DK Shivakumar, Karnataka High Court 2021. DK Shivakumar, you know that DK Shivakumar. DK Shivakumar is basically now Deputy CM of the Karnataka. Earlier when BJP government was there, so they tried their best to to convert DK Shivakumar from Congress to BJP, but they have not able to convert from Congress to BJP. Now he is a deputy CM. So what happened? Income tax department launched the prosecution against him. One raid was conducted. You know, I have shown you that time there was one Panchnama, and that Panchnama was of the DK Shivakumar only. In current batch only, I have shown you one Panchnama of the DK Shivakumar, and DK Shivakumar is from the Karnataka. Now what happened? In that raid, in case of DK Shivakumar, suppose some unaccounted loan, they get to know that. Department get to know about some unaccounted loan. Some loan was given, but that was not recorded in the books of accounts. Now question is that if any unaccounted loan, earlier it was not recorded in the books of account, now directly it is a unearthed. Unearthed means, in simple word, it is now get to know by the department. Question is that is it will be treated that it is willfully evading the tax and all. So answer is here what Karnataka High Court says, that try to understand. So can prosecution be launched in every case where unaccounted transaction like unaccounted loan are unearthed during the search? So if it is like get to know during the search, irrespective of whether there is a liability to pay tax, penalty or interest under the act in respect thereof. So here gist of the offense under section 276C is a willful attempt to evade the tax. Because if you are willfully attempt to evade the tax or penalty or interest chargeable or imposable on the income, what is made punishable is attempt to evade the tax. Suppose he attempt to evade the tax or penalty or interest, then guys this prosecution can be launched from the 6 month to the 7 year. But guys, here there is no presumption under the text that every unaccounted transaction like unaccounted loan in the present case would lead to the imposition of the tax or penalty or interest. Therefore, until and unless it is determined that the unaccounted transaction earned during the search were liable for the payment of any tax or penalty or interest, no prosecution could be launched on the ground to attempt to evade the tax or penalty or interest. So guys, here Karnataka High Court gave the judgment in the favor of the assessee, that is DK Shivakumar. What happened? Raid was conducted. Some unaccounted loan was given. That is like they get to know that you have given some unaccounted loan. Now only unaccounted loan was given. So question is that is it is for the attempt to evade the tax or penalty or interest or not? Answer is no. So they are saying that till now it is not proved that. Until or unless it is proved that it is for the evade the tax or penalty or interest, then only this prosecution can be launched. Otherwise this prosecution cannot be launched in his case. So this is the case law of the 276C subsection 1 DK Shivakumar. Now guys, next is 276C subsection 2 willful attempt to evade payment of tax, penalty or interest, then 3 months to 2 years fine at the discretion of the court. So court will decide that 3 months to the 2 years. So here willful attempt to evade the payment of tax, if you are not paying the tax or you are evading the tax, penalty or interest and all. So this is one section. Just you have to remember this first part, that is 276C subsection 1. Now guys, there is a one section 276CC. Now 276CC, this also you have to remember. So just mark 2-star mark or 3-star mark of this section 276CC. Now guys, what this section says? This section says that willful failure to furnish the ROI, means there is a willful failure to furnish the ROI within the due date under section 139(1) or 142(11) or 148, means willfully you have not filed the ROI. Willfully you have not filed the ROI, and suppose if your evaded tax is more than 25 lakh, then guys penalty will be prosecution jail will be 6 months to the 7 years. Otherwise there will be a jail of the 3 months to the 2 years. and plus fine. So here willful failure to furnish the ROI within the due date under section 139(1) or 139(4), 142(11) or 148. And if it is a willfully you are not filing your return, then guys this penalty, this prosecution will be applicable. And if your evade tax is more than 25 lakh, means suppose I have the tax liability, means there I have the income but I have willfully not filed the return. So if willfully I have not filed the return and department get to know that, then there will be a jail, guys. And here if evade tax was more than 25 lakh, then 6 months to the 7 years, otherwise 3 months to the 2 years plus fine. Now here one exception is given, guys. Just here write exception. Here write except, means this prosecution is not applicable when? This prosecution is not applicable when? So ROI under section 139(1) is furnished before the expiry of assessment year. Here it is a assessment year. So you have filed the ROI before the completion of assessment year, or return is furnished by him under section 139(8)(a), that is updated return, within the time provided in that section. So either guys you have filed the return within the assessment year, you have not filed the return in due date, but you have filed return within the assessment year, or you have filed the return within the time given under section 139(8)(a), or tax payable by the person not being the company except company. Suppose your tax payable on the total income determined on the regular assessment net of TDS, TCS, advance tax, self-assessment tax paid before the expiry of assessment year is up to 10,000 rupees. So guys, this prosecution is not applicable in the two cases. One is the, suppose assessee not filed the return in the due date, but assessee has filed the return before the expiry of assessment year, or assessee has filed the return under section 139(8)(a). And third is, suppose assessee tax payable, means last after taking TDS, TCS, advance tax, all credit after that, if tax was up to 10,000 rupees, then this prosecution is not applicable. Then this prosecution is not applicable. And guys, this is not applicable in case of company, other than company. If there is a partnership firm, individual and all, and after taking the all credit, even he has willfully not filed the return, if that net tax is up to 10,000 rupees, then this prosecution of 6 months to 7 year or 3 months to 12 year is not applicable. Just this much you have to remember, guys. Now there is a one case law, that is Bhavecha Machinery and Others, 2010, MP High Court. Now prosecution under section 276cc, just we have discussed, would not be attracted where the failure to furnish return is time was not willful. Means if it was not a willful, then this particular penalty is not applicable. Okay, this particular prosecution is not applicable. After that, guys, there is a one more case law, that is the EDay Prabha joint venture and other 2023 Supreme Court judgment. Guys, there is a one section 276B and 276BB. So here 276B and 276BB. What this section says? Okay, suppose failure to pay the TDS or TCS or ensure that TDS paid under section 194B, 194R, 194S, 194BA. Failure to ensure that. So either if you failure to pay the TDS, means you are not paying tax to the government. You deducted the TDS, not paying to the government. You collected the TCS, not paying to the government, or you have not made the ensure. Then guys, there will be a prosecution, that is imprisonment of the 3 month to the 7 year plus fine. But guys, there is a one CBDT circular, CBDT clarification. CBDT says that in the small cases, we will not going to charge this. We are not going to initiate this prosecution. In the small cases, we are not going to impose this prosecution. Now, what are the small cases? So here, guys, our CBDT says that suppose if you have not paid the TDS on the time, but you have paid the TDS, if you have paid the TDS within the 60 days, and guys, TDS amount was not more than 25 lakh. If TDS amount was not more than 25 lakh, then we are not going to initiate this prosecution. So here there is a one case law, and this case law says that as per the CBDT circular, in case of failure to deduct or failure to pay the tax, TDS or TCS under section 276B or BB, no prosecution will be processed if the TDS TCS amount does not exceed the 25 lakh. So if your TDS TCS amount was not more than 25 lakh and delay in deposit is less than 60 days. However, for this offense and exceptional cases like habitual defaulter and all, prosecution may be initiated only with the previous approval of the collegium of the 2 CCIT or DGIT rank officer, though the amount involved does not exceed the threshold limit of the 25 lakh. So here, guys, in this particular case law, they are saying that what happened? Suppose in any case, suppose TDS is deducted but not paying to government, or TCS collected and not paying to government, and that TCS is not more than 25 lakh, and guys, if it is paid within the 60 days, then in this particular case this prosecution will not be initiated as per the CBDT circular. And in this case law, Supreme Court referred to that CBDT circular and they are saying that this prosecution is not applicable at all. Done. Now we will check some question from the penalty. So this is the completion of penalty or prosecution part. Now in prosecution, some section I have skipped last this 3-4 section. If you wish to read, then you can read this 4 section I have skipped. Suppose if you wish to read, then you can read it. Okay, so and all case law, 4 case law we have done. Now directly check the question from your compiler. Now guys, in your compiler question, here in your compiler question, first we will do the question number 13. Question number 13. Check the question number 13. Question number 13. Question number 13. What question number 13 says that? This 2-3 question is related to the prosecution. Question number 13. Question number 13 says that, can the department launch the prosecution in case where they have accepted the revised return filed by the assessee, rectifying a mistake on the original return of the income? Now guys, assessee filed the original return. After that there was some mistake, so that mistake is rectified in the revised return. Assessee filed the revised return. Revised return was accepted by the department. Question is that can department initiate the prosecution? Answer is no. Department cannot initiate the prosecution. So guys, here this question came up before the Karnataka High Court in case of the KE Sunil Babu CIT and still processors 2016 judgment. The High Court observed that since the department had accepted the revised return file under section 139(5), it was clear that there was a bona fide mistake in the original return and there was no element of mens rea. Mens rea means there is no intentionally like mistake. Therefore, the High Court held that department cannot launch the prosecution under section 276C, 277 or 278. So just remember that if like you file the revised return is accepted, there is no need of any prosecution. Now guys, there is a one section, that is the section 278C, that is not like given in the compact, but here I have included one question. Okay, sir, in case of suppose any offenses committed by the Hindu undivided family, then how prosecution will be initiated? Is whole family will be in the jail? Means how, like if suppose HUF did any like offense, then how prosecution will be initiated? Is like everyone will be in the jail, all family member? Answer is no. Guys, normally in case of the HUF, suppose if any mistake is made by the HUF and there is a prosecution or jail, in that particular case they will catch the karta. They will catch the karta and karta has to, like karta will be defaulter here. But suppose karta prove that there is no mistake on the part of the karta. If karta prove that there is no mistake on the part of karta, there is a mistake of any other member. Then they will catch the other member and they will leave the karta. So here what this section says, that try to understand section 278C subsection 1 of the Income Tax Act 1961. Where an offense under the Income Tax Act 1961 has been committed by the Hindu undivided family, the karta shall be deemed to be the guilty of offense and shall be liable to proceeded against and punished accordingly. However, the karta shall not be liable to any punishment if the proof that the offense was committed without his knowledge or that he has exercised all the due diligence to prevent the commission of such offense. Now, as per section 278C subsection 2, where offense under the Income Tax Act 1961 has been committed by the HUF, and it is proved that the offense has been committed with the consent or convenience of any or is attributed to any negligent of the neglect of the any part of the member of HUF, then such member shall also be deemed to be guilty of that offense and shall be liable to the proceeded against and punished accordingly. So here first catch the karta. If karta prove that there is no mistake of the karta, then any member mistake, then they will catch the member. Now guys, there is a question number 11. Question number 11. And question number 11 you can mark as 2 or 3 star mark. Okay, because this question they have asked once or twice in the examination. Okay, here instead of the 1000, just write here 8900. There is a one clerical error here in this question. on the page number 86, instead of the 1000, just write 8900. Now guys, what happened in this question? Try to understand. Here, the assessing officer lodged a complaint against the KLM, a partnership firm, under section 276cc of the Income Tax Act 1961 to failure to furnish his return of income for the assessment year 21-22 within the due date under section 139(1). So assessee has not filed the return. If assessee has not filed the return, then there can be a jail. If your tax evade is more than, here we have discussed in that section 276cc, you can check it. So guys, the assessing officer lodged a complaint again KLM partnership firm under section 276cc of the Income Tax Act 1961 to failure to furnish his return of income for the assessment year 21-22 within the due date under section 139(1). The tax payable on the assessed income as reduced by the advance tax paid and deducted at source was 60,000. Now, appeal filed by the firm against the order of assessment was allowed by the commissioner appeal. Now, assessing officer passed an order giving effect to the order of commissioner appeal, and tax payable by the firm as per that order of the assessing officer is only 8,900. So guys, earlier what happened? AO made the addition, and as per AO order, your tax payable was 60,000. But guys, you filed the appeal to the CIT appeal. CIT gave the judgment in your favor, and your tax is reduced to only 8,900. Now, assessing officer has accepted the order of commissioner appeal and has not preferred an appeal against to the ITAT. The firm desired to know the maintainability of prosecution proceeding in fact and circumstances of the case. And would your answer change if the persons against whom complaint was lodged was KLM Limited instead of the firm? So guys, here what happened? Just we have discussed that willfully, if you have not filed the return under section 139(1) or 142(11) or under section 148, then there will be a prosecution. But prosecution will not be applicable in the two cases. One case was, you know that one case was, okay, like if you have filed the return till the end of assessment year, or if you file the updated return under section 139(8)(a), or one more case was that, okay, suppose like in your case, your tax payable was not more than 10,000 other than company, then this prosecution is not applicable. So in this particular case, guys, your tax payable is not more than 10,000 now. This is only 8,900 because after giving the effect of the commissioner appeal order, there is only 8,900. So in this particular case, prosecution is not applicable. But suppose instead of the KLM firm, if there is a KLM Limited, a company, then this prosecution is applicable. Answer is yes, then this prosecution is applicable. So for the prosecution, guys, just you have to read this answer. You will able to understand. Just read this answer and just correct it 1,000 to 8,900. And all other questions are in the homework. You can do it. No issue at all. All other question of this topic is in the homework. Just read the answer of this. And after that, we are going to start with the remaining part of the assessment procedure. Just do that, and after that we'll start with the remaining part of the assessment procedure topic. I'm going to give you 2-3 minutes time. Just do that, and after that check the remaining part of the assessment procedure. That is only last 2 pages are pending from assessment procedure. That is time limit to completing the assessment. This is pending. Yes, people. Done with that question. Now, guys, we are going to start with the some remaining part of the assessment procedure. Now, what are the remaining part? All people pay attention. Directly check assessment procedure, last 2 pages. And last 2 pages is related to the time limit of completing the assessment. Sir, what is the time limit to complete the assessment? So guys, you know that there are 3 types of assessment. In the income tax, there are 3 types of assessment. One was 143.3 scrutiny, one was 147, and one is the 144 and 147. Now, what was the time limit to 143.3 and 144? I have mentioned that here 143.3 scrutiny and 144 batch judgment assessment completion time limit was 1 year from the end of the relevant assessment year. Means 1 year from the end of the relevant assessment year, means after relevant assessment year, within 1 year AO has to complete the assessment. Now, in case of 147, your assessment completion time limit is a 12 month, that is 1 year only, from the end of the financial year in which notice under section 148 was served. So that we already covered there in the assessment procedure. Here it is given in section 153.1. So guys, under section 153.1, they have given the time limit to complete the scrutiny assessment or batch judgment assessment. Now guys, for the scrutiny assessment or batch judgment assessment, from assessment year 20 to 23, your time limit is changed, and that time limit is 12 months from the end of the relevant assessment year. Means from the end of the assessment year, within 12 months they have to complete the assessment. Now guys, earlier this time limit was different time limit, and earlier this time limit for the assessment year 21-22, this time limit was 9 months from the end of the relevant assessment year. For assessment year 2021, this time limit was 18 months from the end of the relevant assessment year. For the assessment year 19-20, this time limit was 12 months. For the assessment year 18-19, this time limit was 18 months. And guys, assessment year 17-18 or earlier years, this time limit was 21 months from the end of the relevant assessment year. But now time limit is at 12 months from the end of the relevant assessment year. I feel there is no need to remember this time limit, but it is given in the law, it is given in the ICI material. So I have mentioned about this earlier assessment year also. For the assessment year 21-22, that time limit was 9 months. Before that 18 months, before that 12 months, before that 18 months, and before that 21 months. So guys, for current like assessment year 22-23 onwards, now this time limit is at 12 months from the end of the relevant assessment year. But earlier for the 21-22 time limit was 9 months, 20-21 time limit was 18 months, 19-20 time limit was 12 months, for assessment year 18-19 time limit was 18 months, and 17-18 and earlier year that time limit was 21 months from the end of the assessment year. But guys, yes, sir, you are saying that this time limit to complete the assessment is just, you have to remember this 12 months, this time limit, there is no need to remember. Now, sir, you are saying that assessment completion time limit is 12 months from the end of the relevant assessment year. But guys, updated return, you know that we have discussed about the updated return. That updated return you can file within 2 years from the end of the relevant assessment year, Shiva. That updated return you can file within 2 years from the end of the relevant assessment year. So sir, you are saying that time limit is 12 months from the end of the assessment year, and suppose after that if any updated return and all file is then guys, they have specifically mentioned that if updated return is filed, then your time limit will be 12 months from the end of the financial year in which the updated return was furnished. And on this particular part, they may ask you the MCQ in the examination. So where updated return under section 139(8)(a) is furnished, then the time limit is 12 months from the end of the financial year in which the return was furnished. So in the year in which updated return was filed, from the end of that financial year, within 12 months assessment has to be completed. Now guys, under section 153.2, section 153.2 is related to the income escaping assessment 147. So this income escaping assessment has to be completed within 12 months from the end of the financial year in which notice under section 148 was served. Now guys, there is a time limit of 153.3. Now 153.3 says that, if you remember, then we have discussed that like, is a CIT appeal or ITET has the power that they can cancel the assessment of the AO and ask AO to do the fresh assessment. Is it possible? I have mentioned there in the appeal topic that CIT appeal, Joint Commissioner appeal don't have that power. But ITET has the power. Means ITET has the power that they can cancel the assessment of the AO and they can ask AO to do the fresh assessment. Just do the fresh assessment. So they can cancel your assessment and they can ask AO to do the fresh assessment. Is it possible? Answer is yes, guys. This power is with the ITET as well as with the bosses. Bosses means CIT, PCIT, CCIT, PCCIT. So whenever they do the revision under section 263 or 264, then under section 263 or 264, they can cancel the assessment of AO and they can refer back to AO for the fresh assessment. Now question is that when case is refer back to AO for the fresh assessment, then AO will complete the assessment in what time? So here guys, AO will complete the assessment within 12 months from the end of the financial year in which order of the ITET is received by the bosses or bosses pass the revisional order under section 263, 264. From that year end within 12 months, AO will complete the assessment, that is the fresh assessment. So here what this section says, that try to understand. Section 153.3. This section says that a fresh assessment under section 143, 144 or 147 or a fresh order of the TPO under section 92 CA where the original assessment or order under section 92 CA of the TPO has been set aside or cancelled and refer back to the AO by the order under section 254. Here near to 254 just write the ITET. 254 is a ITET order and guys this 263, 264 is your revisional order. 263, 264 is a revisional order by the bosses and 254 is a ITET order. Then guys, AO will complete the assessment within 12 months from the end of the financial year in which order under section 254 is received by the bosses. Means ITET will communicate with the bosses only. So ITET order is received by bosses from the end of that year within 12 months, or order under section 263, 264 is passed by the bosses. So order under section 263, 264 passed by the bosses or ITET order is received by bosses from end of that year within 12 months. AO will complete the fresh assessment. Now guys, there is a one very interesting section and this is inserted by this year only. There is a one section 153.3a. And 153.3a, this section says that, okay guys, suppose in your case, if raid is conducted by the department, if search is conducted by the department, search is conducted in your case, or raid is conducted in your case, then guys, if raid is conducted today and today your some assessment is pending, then guys, AO will get the 12-month additional time limit to complete the assessment. So here, where assessment or reassessment is pending on the date of initiation of the search. Means in your case, suppose raid is conducted today, or requisition is made in your case and guys your assessment is pending today. Means suppose some earlier assessment is going on and in your case raid is conducted. Then guys, whatever time limit available to the AO na, this time limit, whatever time limit, this 12-month time limit, 12-month time limit, 12-month time limit, this all time limit will be increased by further 12 months. Means time limit will be now 24 months. Time limit will be now 24 months. Time limit will be now 24 months. So in simple words, suppose today in your case raid is conducted and your one assessment scrutiny is pending or your 147 of 1 year is pending, like it is going on, then AO will get the additional 12-month time. AO will get the additional 12-month time. Now 153.4 says that suppose guys your case is transferred to TPO. Whenever your case is transferred to the TPO in the transfer pricing topic na, then time limit will be increased by the 12 month. Means AO will get the additional 12 month. Here also AO will get the additional 12 months. So suppose if your case is transferred to the TPO, so TPO will take the time in passing the order, TPO order. So here your assessment will be increased by the assessment time limit will be increased by the 12 months. Now 153.5 is given, 153.6 is given. We'll discuss later. Before that guys, we have to discuss some specific point here. Okay guys, while calculating this time limit na, certain period will be excluded. Certain period will be excluded means it will be extended. Means if there is any time lost of the assessing officer, because assessing officer doing the assessment and suppose if any time is lost, then that time will be extended. Sir, what do you mean by lost? I can take one example, try to understand. Suppose for an example guys, suppose here assessee name is a Miss Meghna. Miss Meghna is a assessee. Now Meghna's previous year in case of Meghna, suppose previous year is our previous year 23-24. Now previous year is ended by 31st March 2024. After that assessment year 24-25. This assessment year will be ended by 31st March 2025. So previous year 23-24, assessment year 24-25. Now guys, for this year, suppose AO wants to make the assessment under section 143.3, scrutiny assessment, then can I say that assessment will be done within 1 year, means 12 months from the end of the relevant assessment year? So here guys, your assessment year will be completed by 31st March 2025 and your assessment will be done till 31st March 2026 because there is a 12-month time limit. So here till this date, your assessment will be completed under section 143.3. But guys, during the assessment, some time is lost now, then that time will be extended. Now your question will be, like sir, where time can be lost? So here guys, some 10 points are given. And in this 10 points, if your time is lost, then AO will get the additional time. Now what are these 10 points? First, we will start from the point number 10. Point number 10 is very simple. Suppose time lost in giving the opportunity of being reheard under section 129. If you remember, then in the assessment procedure, I have mentioned that many times it's happened that suppose if any assessing officer is transfer, means suppose one assessing officer is transfer, then new assessing officer will be in place of the old assessing officer. Then guys, that new assessing officer will start his working from the stage where old assessing officer left the work. But guys, if you are requesting for the reheard opportunity, if you are saying that sir, please give the opportunity of reheard, then guys, they will give you the opportunity of reheard. They will give you the reheard opportunity, and guys, in that reheard opportunity, if any time is lost now, then that time will be extended while calculating the time limit to complete the assessment. Suppose in case of Meghna, assessment is pending, one AO is transferred and new AO came. The new AO, Meghna requested, sir, please reheard my some point. And then in that reheard proceeding, suppose there is a 40 days lost, then that 40 days will be extended while calculating this time limit of 31st March 2026. Means 31st March 2026 will be added by the 40 days. Now one more point. Guys, suppose if there is a period for which the assessment proceeding is stayed by any court. Stay means there is a stay order of the court. Suppose High Court or Supreme Court or any other court has stayed that assessment. Now don't do the assessment, stay order. And suppose stay order was for the 5 months, then 5 month AO will get the additional time limit. Now if you remember, then in the assessment, in the trust topic, you know that if trust did any specified violation, and AO is doing the assessment and AO realized that, oh, trust did the specified violation. Now, what are the specified violation? Specified violation means suppose trust activity is not genuine, or suppose trust has used the money for the, trust has basically used the money for the private religious purpose, or suppose trust is working for the specific caste, community or religion, or trust is not followed the any other law. Then if AO realize, oh, there is a specified violation, then what AO will do? AO will request to the commissioner. AO will request to the CIT or PCIT, and he will refer the case to the CIT, PCIT, and AO will say that, sir, they did some specified violation. Just check it. And suppose after that he will wait for the order of the CIT, PCIT, and there may be possibility CIT, PCIT may cancel your registration, or they may deny to cancel your registration. So guys, whatever time lost when AO intimated to the CIT, PCIT about the specified violation, and when AO get the order of that cancellation, till that time limit will be excluded while calculating the assessment completion time limit. So here, point number 8 says that AO made the reference to the CIT, PCIT in case of a specified violation by the trust or institution under section 12AB subsection 4. Then date on which AO makes the reference to CIT, PCIT, and date on which copy of order of CIT, PCIT under section 12AB4 is received by the AO. So date on which copy of order of CIT, PCIT under section 12AB4 is received by the AO. You got my point or not? Yes. Now guys, directly check the point number 1. Point number 1 is, there is no trust. But guys, there are certain institution, college, universities and all, they are claiming the exemption under section 1021, 1022b, 1023a, 1023b. Example is our institute, CA Institute. So ICI is claiming the exemption under section 1023a. They enjoying the exemption under section 1023a. But guys, this 1023 exemption is given with the certain conditions. Suppose AO was doing the assessment. And when AO was doing the assessment, that time he realized that, oh, ICI has not satisfied the condition. Then what AO will do? AO will intimate to the central government or prescribe authority about the violation. And he will wait for the notification of the government or prescribe authority. So when AO intimated to the government or prescribe authority and he received the notification copy, till that time, guys, whatever time lost in this proceeding, that will be excluded while computing the time limit, to complete the assessment. So here, date on which AO informed the government or prescribe authority from and till the date on which government notification received by AO withdrawing the approval. Now guys, suppose AO asks you to do the special audit. A special audit and inventory valuation, we already discussed under section 142(2)(a). Like many times, suppose AO is not satisfied with your books of accounts, means there is a, like, you know, that we have discussed that suppose books of accounts are very complex and AO think that there should be a special audit, then it will be helpful for the department. Then AO will give you the direction of the special audit, and remuneration of that chartered accountant or CMA will be paid by the government. We have discussed that process 142(2)(a). So guys, date on which AO give the direction for the special audit until the last date on which assessee required to file the report. Suppose AO allowed you to 60 days to file the special audit report, then 60 days will be extended. Suppose AO allowed 120 days, then 120 days will be extended. But suppose assessee filed the report within 100 days, then also 120 days will be extended. Because here they mention that from the date on which AO direct till the last date on which assessee required to file the report. Till last date on which assessee required to file the report. So date on which AO direct till the last date on which assessee required to file the report. Till last date on which assessee required to file the report. Or guys, suppose assessee direct file the writ petition to the High Court against the direction, and High Court says that no, there is no need to of the special audit, and High Court order is received by the department. So till that time limit will be excluded. So here, or date on which order set aside such direction was received by bosses if direction is challenged by assessee in directly court. So either guys, suppose a special audit direction is given, so whatever time allowed in that direction, that time will be extended. Or second is, suppose direction is challenged by the assessee at the any court level, then guys, whatever the time lost in that, it means from the date on which AO direct till the court is giving order, no, there is no need of direction, means direction is set aside. And that order is received by the bosses, till that time it will be excluded while calculating the time limit. Now next part. Suppose reference to valuation officer. In that topic, assessment procedure, we have discussed that many times, if AO want to calculate the value of any investment or any asset or any property, he may refer your case to the valuation officer. So suppose he made the reference to the valuation officer, then guys, date on which AO makes the reference to the valuation officer till the date on which report is received by AO, that time will be excluded while calculating the time limit to complete the assessment. So here, date on which AO makes the reference till the date on which report received by the AO. Date on which AO makes the reference till the date on which report is received by AO, that time limit will be excluded while calculating the time limit to complete the assessment. Now guys, if you remember, there was one section 158(a), that is avoidance of the repetitive appeal. Now what was that avoidance of the repetitive appeal? You know that suppose your one case is already pending in High Court or Supreme Court. One case is already pending in High Court and Supreme Court, and other case is pending with the AO. Then you will request to the AO, okay, sir, we request you, just give us in writing, okay, whatever the judgment of our that case you will apply on this year also. please apply that judgment of that case in this year also. And suppose AO accepted that, AO will give you the declaration. So first you have to request to the AO, and AO will give you declaration okay, yes, okay, I will do that. So guys, whatever time lost in this proceeding, that will also extended by the AO while completing the assessment. So here, declaration filed by SSC under section 158A, that is avoiding of the repetitive appeal. So here, date on which AO has received the declaration from SSC, and date on which AO or ITET passed the order of accept or reject the declaration. However, such period cannot exceed the 60 days. Means this extension can be maximum 60 days here. Now next part. Suppose application made to the bar means board for advance ruling. So guys, you know that if you made the application to the bar, but bar has rejected your application. Suppose your case is already pending with the income tax department, then you cannot file the appeal to the bar. Suppose bar has rejected your application. So you made the application to bar and bar has rejected your application. Now AO will complete the assessment. So AO will get the extra time. So here, date on which application was made to the bar, and date on which order of rejection is received by the CIT PCIT, or date on which advance ruling pronounced is received by the CIT PCIT. Now many times what happened in case of the public sector company, even your case is pending with the bar. In case of the public sector company, even your case is pending with the bar, then also you may apply to the, even your case is pending with the bar, even your case is pending with the assessing officer, then also you can apply to the bar. So what happened? Your case was pending with the AO, public sector company applied to the bar, bar has given the judgment. So when a judgment order is received by the department, till that time limit will be extended for the assessing officer. Now last part, second last part basically. And this part says that, suppose guys, in your case assessment is pending, and in your case, suppose information is requested from the foreign government under 90 or 98, then department will get the extra time, because that information may be received after like 5 months, 6 months. Suppose your case is pending and department want the information from the Switzerland government under the DDAA. So they will ask to Switzerland government will furnish this information. So whatever time lost in this that will be extended while calculating the time limit to complete the assessment. So here, where reference of exchange of information under section 90 or 90A is made, and date on which reference is made, and date on which the information received by the department, or 1 year, whichever is less. So guys, here time limit cannot be more than 1 year. Here time limit cannot be more than 1 year, means extension cannot be more than 1 year. So whatever time lost in that, or 1 year, whichever is less. Now last part. And this point says that, guys, in case of SSC, many time raid is conducted by officer who is not a assessing officer. I can take an example. If you remember, I have mentioned about the Reliance office is in Mumbai head office, assessing officer is from Mumbai. But guys, raid conducted in the Ahmedabad also, raid conducted in Bangalore also, raid conducted in Chennai office also, raid conducted in Pune office also, and other officer will conduct the raid. So if raid is conducted by this officer is known as the authorized officer. Now guys, this authorized officer will hand over all the like money, bullion, jewelry, any other valuable article and things, books of accounts, documents to the assessing officer of the Mumbai, assessing officer having jurisdiction over the Reliance. So he will hand over all the material and books of accounts and all to the assessing officer having jurisdiction over the Reliance. Then guys, whatever time lost in that, that time will be extended, but this cannot be more than the 180 days. So here, search under section 132 or requisition under section 132A is made in case of SSC or any other person. In this case, maximum time can be extended is 180 days. Means date on which search or initiated or requisition is made till the time, date on which books of accounts, document or money, etc., handed over to the assessing officer having jurisdiction over the SSC. Now guys, there is a note is given, and this note is very relevant. This note says that after exclusion of above time limit, means whatever time limit given here in the 10 point, after exclusion of above time limit, the period referred under section 153, 1, 2 or 3 available to AO is less than 60 days. Then such remaining period shall be extended to 60 days. Means if this period is less than 60 days, then remaining period will be extended to 60 days. Now, what is the meaning of that? I will explain you. Try to understand. Very interesting. Here, last part, just first focus here. I will give you time to draw this example also. Don't worry. Just focus here. What happened, guys? In case of Meghna, under section 143.3, assessment for the assessment year 24-25 should be completed by this date. But guys, what happened here? Suppose assessing officer made reference to the valuation officer. Here suppose assessing officer made refer case to valuation officer, and suppose they referred case to valuation officer on 15 Feb 2026. They refer the case to valuation officer on the 15 Feb 2026. Now don't write, I will give you time. Now what happened? Valuation officer submitted the report here. Report submitted by VO on suppose 17 March 2026. So can I say that here reference was made on this date to the valuation officer? Report is submitted by this date on valuation officer. So whatever time lost between this, AO will get the additional time to complete the assessment, because it is mentioned in the point number 3. A reference to valuation officer, date on which AO makes the reference till the date on which he received the report of the valuation officer. So guys, whatever time lost between this period, it will be extended. Now can I say that here what is the time lost basically? So can I say that from 15 Feb time is lost. So in the 28 days in the Feb, out of that 14 days, so can I say that 14 days of the Feb, 15, 16, 17, 18 till 28. So 14 days of the Feb and guys 17 days of the March. So can I say that total time lost is a 31 days? Here 31 days time is lost. And Shiva, when 31 days time is lost, then can I say that here AO will get the additional 31 days? Here AO will get the additional 31 days, and additional 31 days means April 30 days and May 1 day. It means can I say that assessment has to be completed by the 1st May 2026? Assessment has to be completed by the AO till 1st May 2026. Till now there is no issue. Till now there is no issue. Guys, the time lost was 31 days. So here 31 days I have extended the time limit. Here 31 days, I have extended the time limit by 31 days. So 1st May 2026. So this is 31 days time limit. I have extended the time limit by the 31 days. But guys, what this last point says that, last note says that after exclusion of this time limit also, if AO in his hand, there is time period remaining is less than 60 days, means time period remaining is less than 60 days, then remaining period shall be extended to 60 days. It means guys, can I say that here when valuation officer submitted this report on this date, means valuation officer submitted this report on this date, AO got the report. Guys, how many days from this date are in hand with the assessing officer? So can I say that when AO received the report on the 17 March, so after 17 March, how many days are there in hands of the assessing officer? So can I say that in hands of the assessing officer, after 17 March from 18 March. So in the March 31 days, just reduce the 17 days. So 14 days of the March. Can I say that AO is having the 14 days of the March, after that 30 days of the April and 1 days of the May. So can I say that 40 plus 30 plus 1. So AO is having the 45 days in his hand. AO is having only 45 days in his hand, because on the 17 March report is submitted. So in this particular case, guys, March month 31 minus 17, it comes to the 14 days of the March. April there is a 30 days and May 1 day. So 45 days AO is having in his hand. In this case, AO is having the time period less than 60 days. In AO hand, there is a time period of the less than 60 days. So guys, in AO hand, if time period is a less than 60 days, then AO will get at least minimum 60 days time. From this date, AO will get at least minimum 60 days time limit. AO will get minimum 60 days time limit. It means guys, from 1st May, you have to add the 15 more days. So can I say that now your assessment completion time limit will be the 60 May 2026. This is the assessment completion time limit. So here assessment completion time limit is your 16 May 2026. Just copy down this example. Copy down this example. Yes, people, done. Okay, Nagappan is asking one doubt. Sir, assessment date is falling on the national holiday day. It will be considered. Answer is yes. That date will be considered. There will be not be any extension in that case. Department should take care of that, yeah. There are lots like time limit. They have to, even it is on the national holiday, they have to work in the office and they have to pass the assessment order. Done, people? Say done. So this part they have never asked till now, but yes, you should remember this. Then people, so this was all about extension. Now guys, there are two more section, 153.5 and 153.6. Now this two section, as well as like this section, whatever we have discussed earlier, if it is possible to remember, then remember. Otherwise, just try to remember that at least this two time limit. One was for 143.3 and 144, that is 12 months from the end of the relevant assessment year, and one is this time limit for the 147. Just remember this much. In examination point of view, normally they will not ask other time limit, but this is given in the law, so we have to study. Now guys, 153.5, and what is the 153.5? 153.5, this section says that, hey guys, suppose for an example, in your case Nihal, suppose you file the appeal to the CIT appeal, or after ITET, or after High Court, after Supreme Court, your appeal was there. And suppose that order is came, and in order, suppose you won the case. So when you won the case, then obviously AO has to change your assessment. Because earlier your assessment was made by AO, but now that order is came of the CIT appeal or ITET or High Court or Supreme Court, and due to that, suppose your income is reduced or your losses are like increase or something like that. So in that case, obviously AO will give the effect of that judgment in your assessment. Now question is that till what time AO will give the effect? Means here AO is not doing the fresh assessment. AO has to just give the effect of the whatever judgment came from the CIT appeal or ITET or High Court or Supreme Court, then AO has to give the effect of that order in the assessment order. So guys, here AO will give the effect within 3 months from the end of the month in which order of the CIT appeal, ITET, High Court, Supreme Court is received by the bosses. Or suppose bosses pass the 263, 264 revisional order, then from the end of that month, within 3 months, AO has to give the effect. So pay attention. Here, effect to be given by AO or TPO to an order under section 250. So here 250, you can write that JC appeal order or CIT appeal order. So this is the 250 order. Now 254, just write ITET order. 260, just write High Court order, and 262, just write Supreme Court order. So here effect to be given by AO or TPO to an order under section 250, 254, 260, 262, 263, 264 are revisional order. Otherwise, then there is a fresh assessment. There is no fresh assessment or fresh order. There is a only just give to effect. Then what will happen? Time limit to AO is 3 months from the end of the month in which order under those sections CIT appeal, ITET, High Court, Supreme Court is received by bosses, or bosses pass the 263, 264 order. Done. Now guys, suppose if it is not possible for AO to give the effect within 3 months, then AO will get the additional 6 month time. So here in this section, that time limit will be the 9 months. Suppose it is not possible for AO to give the effect within 3 months, then AO will get the additional time limit of the 6 months. So here, additional period of the 6 months may be allowed by CIT, PCIT to the AO or TPO if AO, TPO apply that order could not be given effect within the 3 months. So if AO applied that or TPO applied that it is not possible to give the effect within 3 months, then time limit will be the 9 months from the end of the month when order of the CIT appeal, ITET, High Court, Supreme Court is received by bosses or bosses pass the order under section 263, 264. Now guys, many times what happened? Suppose before giving the effect of CIT appeal, ITET, High Court, Supreme Court order, if there is some verification is required, means before giving effect, suppose verification is required, or opportunity of being heard to the assessee is required, or any other person is required, and only after that AO will give the effect, then guys, this time limit will not be this 3 month time limit from the end of the month or 9 month. This time limit will be whatever time limit given under section 153.3 for the fresh assessment, then 12 months from the end of the financial year, that time limit will be applicable. That is given in this note. So suppose AO or TPO require the verification of any issue by way of submission of any document by assessee or any other person, or where an opportunity of being heard is to be provided to the assessee, the time limit to give effect in 12 months is provided under section 153.3. So here it is a provided under section 153.3. So here time limit will be the 12 month whatever given under section 153.3. Now guys, many times what happened? Suppose if TPO has given the effect TPO order is changed. So due to TPO order, AO order will also be changed. Suppose TPO order is changed, transfer pricing officer order is changed due to the order of the CITFL, ITAT, High Court, any court order or any revision order. TPO order is changed. So now AO order has to be changed. So after TPO change, AO will change his order in what time? So here, where TPO give the effect of an order or a direction under section 263 by the order under section 92 CA and forwarded such order to the AO, then AO shall proceed to modify the order of assessment in conformity with the order of TPO within the 2 months from the end of the month in which order of TPO is received by the AO. So whenever AO will receive the order from the TPO from the end of that month, within 2 months he will give the effect. Last section 153 6 subsection 1. This section says that, okay guys, if you remember, then you know that under assessment we have discussed somewhere unlimited time limit to issue the notice under section 148. We have mentioned about the case law of the Nita Ambani and Mukesh Ambani. Suppose Nita Ambani, one case was in the high court in the ITAT, and ITAT decided that no, this income should belongs to the Mukesh Ambani. So Mukesh Ambani case can also be open and income can be included in the income of Mukesh Ambani. So question is that till what time Mukesh Ambani assessment will be completed? So guys, here last point, this is the last point. This point says that where assessment or reassessment made in consequence to or give effect to of any order, any finding or direction in any order under section 250. 250 is basically CIT appeal, 254 ITAT, 260 High Court, 262 Supreme Court or revisional order or order of any court. Refer section 150 of the assessment. Guys, 12 months from the end of the month in which the order is received or passed by the bosses. So 12 months from the end of the month in which order is received by the bosses or passed by the bosses. And last case, if suppose in case of partnership firm, there was a 147, then guys, partner assessment will also be changed. If there is a partnership firm assessment under section 147, then partner assessment is also going to be changed, and partner assessment will be changed. Partner assessment will be a department will do the partner assessment, but partner assessment will be done within 12 months from the end of the month in which firm assessment was completed. So here, where assessment made on partner due to the assessment made on the partnership firm, then guys, 12 months from the end of the month in which the assessment order in case of the firm was passed. So assessment order of the firm is passed, from end of that month within 12 month partner assessment will be completed. So this is the last part of this section. Now guys, this was the pending part in the assessment that is completed. Now just check the last topic. One last topic is given, some remaining case laws. Some remaining case laws and concept. One small last topic is given. So guys, there are some remaining case laws are there. We'll discuss that case law because that case law, that time when I made the book, first volume or second volume, that time this case laws were not there in the ICI material, or I think that they will include or not, but they have included. So I have considered here some remaining case laws. So guys, there is a one case law of the Honda Sale Car India Limited 2017 Supreme Court judgment. What happened in this case law? First, we will understand with the help of one example. Guys, you know that there is a one company, name is a Honda. And Honda is a one Japan-based company. Japan-based one company is called Honda. In India, there is a one company, name is a Sale, and that is the Indian company. India, there is a one company called Sale. Now guys, Honda and Sale, different countries company. Honda, Japan company, India, Sale company. Now what happened? This both company made one joint venture company in India, and that joint venture company name is a Honda Sale India Limited. And there is a joint venture company. This is the joint venture company. Now guys, they will set up a JV company in India, and that company name is a Honda Sale India Limited is a JV company. Now guys, this Honda Sale India Limited is one joint venture company, and this Honda Limited Japan is giving, there is a technical collaboration agreement between this JV company and Honda company. There is a technical collaboration agreement is there. And guys, this Honda Limited will provide the know-how to the joint venture company. Means Honda provide know-how to the joint venture company, as well as they will provide the technical help to this company. And there is a technical collaboration agreement. And guys, in that technical collaboration agreement, they mentioned that Honda will provide all the know-how and all to this JV company. And suppose if technical collaboration agreement is violated, or if there is a technical collaboration agreement is completed, then this JV business will be completed in India. Means JV business will not be like JV business will be like you can say that discontinued in India. So there is a one TCA agreement, technical collaboration agreement with the Honda and this JV company. And in this TCA agreement, this is mentioned that Honda will give the technical know-how and all to this particular company, means this JV company. And guys, if there is any violation of this agreement, then in India, this JV business will be discontinued. Now there is a question. Yes, sir. Under technical collaboration agreement, whatever amount paid by this JV company to the Honda, that amount to take the technical assistance and all, that amount is a revenue expenditure or capital expenditure. That is the case. Whatever amount paid by this JV company to the Honda, is that amount is a revenue expenditure or capital expenditure. Now here guys, Supreme Court analyzed the fact of the case, and Supreme Court says that suppose if you acquired any limited right from someone now, and for the limited period, then it may be treated as a revenue expenditure. But suppose if you have acquired the right, and guys, that right is a necessary to do the business, and suppose if there is no that such right, then your business will be discontinued in India, then whatever amount you have paid, that will be treated as the capital expenditure. That will be treated as the capital expenditure. So that is going to be treated as a capital expenditure. That was the judgment of this particular case law. So try to understand what here mentioned by the Supreme Court. So here, whether technical fees paid under the technical collaboration agreement for setting up a joint venture company in India is to be treated as revenue or capital expenditure. Where upon termination of agreement, if there is a termination of agreement, the joint venture would come to the end. Means joint venture business will come to the end. Now here Supreme Court observed that if limited right to use a technical know-how is obtained for a limited period for improvising the existing business, then expenditure is a revenue in nature. But however, if technical know-how is obtained for setting up a new business, and the position may be different, there is no single principle or test for determining the nature of expenditure if the question is to be answered based on the circumstances of each case. In the given fact, the very purpose of the TCA has to set up a JV company. And the collaboration include not only the transfer of technical information, but complete assistance, actual and factual, and on the spot the establishment of the plant, machinery, etc., etc. So as to set up the manufacturing unit, upon termination of TCA, the joint venture itself would come to the end. So technical fees paid under TCA for setting up a joint venture company in India is to be treated as capital expenditure, since upon termination of TCA, the joint venture itself would come to the end. Means suppose after termination of that agreement in India, business will be come to the end, then this expenditure will be treated as capital expenditure, and obviously this expenditure is not going to be allowed in India. It is not allowed as a revenue expenditure. Done. Now next case law is a Saurashtra Cement Limited. Guys, suppose if there was a, like suppose if I purchase any asset and that person could not fulfill the condition within the time limit, then I will ask for the compensation. Suppose that person has given me the compensation, that compensation will be treated as the revenue receipt or capital receipt. That is the question. Yes, sir. Suppose, guys, suppose if there is a revenue contract, and if there is a that person could not fulfill the condition and whatever compensation is received, that is the revenue receipt. But suppose for an example, I was acquiring the plant and machinery. I was acquiring one plant, and suppose that plant, that person has not, that for the plant, that person has not supplied that plant within the stipulated time limit. And I demanded the compensation, that person has given me the compensation, then question is that, is that compensation you received, that will be your revenue receipt or capital receipt? Right answer, that will be treated as your capital receipt. That will be treated as your capital receipt. Just read it. Just read it. Just here read it. Done, people. Now next case law is a Shakti Metal Depot 2021 Supreme Court judgment. Guys, what happened in case law? Shakti Metal Depot 2021 Supreme Court judgment. Now you know that if any asset is part of your block of asset is always a depreciable asset, and depreciable asset there will be a always short term capital gain. Now what happened? Suppose in block there were 4 or 5 building, but some building are not using for business purpose from last 2-3 years. There may be possibility that some building are not using in the business from last 2-3 years, but that asset were part of your block of asset. That asset were part of your block of asset, but you are not using that asset in your business from last 2-3 years, and you sold that asset. Question is that there will be a short-term capital gain or long-term capital gain. The right answer is short-term only. If any asset is a part of your block of asset, if any asset is a part of your block of asset, even you are not using that asset from last couple of years, then also that asset will be treated as short-term capital asset only. And if you transfer that asset, then there will be a short-term capital gain only. There will be a short-term capital gain only. So here, depreciable asset forming part of the block of asset within the meaning of section 2, clause number 11 would not cease to be part of block of asset as long as the assessee continue the business. In this case, the building forming part of the block of asset would retain the character as such only, even if 1 or 2 of the asset in the block were not used for the business purpose in the last couple of years. Consequently, the profit arising on the sale of such asset would be the short-term capital gain only. So this is the Shakti Metal Depot. Now guys, there is a one case law of the Gujarat State Fertilizer and Chemical Limited 2018 Gujarat High Court. Now what happened in this case law? Try to understand. I will explain you. Very simple case law. Guys, for an example, suppose there was one company, that is Gujarat State Fertilizer Corporation Limited. Now what happened? Suppose this company is engaged in manufacturing of the fertilizer. They engaged in manufacturing of fertilizer. Now you know that fertilizer price is always controlled by the government of India. So government of India always control the fertilizer price. Now suppose this company, cost of fertilizer manufacturing is 100 rupees is the cost of manufacturing of fertilizer, but government says that no, you have to sell to the farmer at only 70 rupees. Means you have to sell to the farmer at 70 rupees only. They says that sir, our cost of production is 100. How we can sell at 70 rupees? Government says that no, don't worry, you have to sell at 70 rupees only. If you sell at 70 rupees, don't worry, we will give you 30 rupees subsidy. We will give you 30 rupees government grant. So here government of India will pay the 30 rupees to this fertilizer company. Then guys, whenever you will prepare the P&L, then how you will show in the P&L? So in P&L guys, in the buy side, there will be a subsidy. Selling price is 70 and 30 rupees is subsidy. That is the government grant. That is going to be taxable under the head PGBP. Answer is yes, because your cost will be 100 here. So in the credit side, there will be a 30 and 70. So government grant is taxable under the head PGBP. Government grant is taxable under the head PGBP. Now guys, when government grant is taxable under the head PGBP, government grant is taxable under the head PGBP. Now what happened? This government grant is taxable under the head PGBP. Now suppose government of India don't have the money also to give this government grant or subsidy. Then what government has given? Suppose government, instead of the government grant of 30 rupees, government has issued the fertilizer bonds. There is a one kind of the bond, fertilizer bonds, worth rupees 30. So 30 rupees fertilizer bonds is issued by government. Now when 30 rupees fertilizer bonds is issued by government, assessee says that, okay, your bond is received. Government grant is not received. Instead of the grant, he received the bond. Now suppose he sold this bond at 25 rupees and this is the sellable, tradable bond. So assessee sold this bond at 25 rupees. Then guys, there is a 5 rupees loss. Now there is a question, this loss is a PGBP loss or capital gain head loss? That was the question. When instead of the fertilizer subsidy, assessee received the fertilizer bond and now he sold the fertilizer bond. Now he sold the fertilizer bond, and when he sold the fertilizer bond, there is a loss of 5 rupees. Question is that this loss of 5 rupees will be treated as your capital gain head loss or the business loss. Right answer is here government, like court gave the judgment, Gujarat High Court. Gujarat High Court says that since it was a your if subsidy was received, then it should be taxable under the head PGBP. So bond is also taxable under the head PGBP, and if there is a loss, then this loss will be treated as your business loss. This loss will be treated as your business loss. So here guys, fertilizer subsidy given to the assessee to compensate the loss on sale of fertilizer should be treated as a business income. Due to the cash crunch, the government of India has discharged its due of paying subsidy by issue of the fertilizer bonds. These bonds are sellable in the open market and market price. In this case also, the assessee received the fertilizer bonds in lieu of the subsidy, which were sold at a loss in the open market. Since the subsidy would have been treated as business income, the loss on sale of fertilizer bonds issued is to be allowed as a business loss. Now guys, there is a one case law, Govind Bhai Mamaiya, after that we'll do the Venkatesh premises. Govind Bhai Mamaiya, 2014 Supreme Court judgment. Now what happened guys? Suppose one property was of the father and father died, and after father death, property is inherited to the three children. Three sons, that property was inherited. Now when property inherited, after that it is compulsorily acquired by government. So when compulsory acquired by the government, then there will be a capital gain. Now question is that capital gain will be assessed in the three sons separately, or that three sons will be treated as AOP BOI and capital gain will be taxable in hands of the AOP. Right answer is here. Like Supreme Court gave the judgment. Supreme Court says that AOP means when any person is willingly coming together for any purpose, then it will be a AOP. Here there will not be a AOP. So whatever capital gain, that will be divided amongst the three sons, and capital gain will be taxable individually in hands of three sons. So here, land inherited by three brothers is compulsorily acquired by government, whether the capital gain taxable in hands of AOP or in their individual status. So here they says that AOP could be formed only when two or more persons voluntarily combine together for a certain purpose. In this case, the property in question came to the assessee possession through the inheritance. The income from asset inherited by the legal heir is taxable in their individual hands and not in hands of the AOP. Now guys, there is a one question of the Venkatesh Premises Cooperative Society Limited 2018 Supreme Court judgment, as well as the guys, there is a one case law of the Sindh Cooperative Housing Society 2009 Bombay High Court. Both judgments are similar. Sir, there is a one concept is called mutuality concept, and that concept we have discussed in the PGBP. Mutuality concept means whenever, like suppose for an example, we are the 10 people. Suppose we decided that for the final match we will watch together and we will party that day, and suppose just contribute the 1,000 rupees. So suppose 1,000 rupees contributed by 10 people, so that total fund is 10,000. Now out of 10,000 we spent total 8,000, so 2,000 is remaining. Now question is that is 2,000 is income? Is 2,000 is income? Answer is no. Now we cannot do the business with ourselves. Now we cannot do the business with ourselves. So there is a concept of called mutuality, and in case of the mutuality guys, there is no need to pay any tax. Mutuality, there is no income, there is no income tax on the mutuality income. So on the same principle in India, all housing cooperative society, you know that in the housing cooperative society, every month they charge the society charges. They charge the society charges, and that money they spend for the benefit of member only. Suppose I am staying in one house and my house is in the cooperative society, housing cooperative society. So they are charging every month society charges, and they use that society charges for the benefit of the member only. Whenever any new member join the society, then they ask for the joining fees, transfer charges and all. So question is that income is exempted on the basis of mutuality or not? Right answer is yes, it is exempted. So here what this point says, try to understand. The doctrine of mutuality is based on the common law principle that person cannot make the profit from himself. Accordingly, the transfer charges, non-occupancy charges, common amenity fund charges or other charges are exempt owing the application of the doctrine of mutuality. And these charges are collected from the member and applied for the benefit of member only. is exempted due to the mutuality. Now in the same line there is a case law. This is the transfer fees received by the cooperative housing society from its incoming and outgoing member be exempt on the ground of the principle of the mutuality. But suppose cooperative society made the bank FD. A cooperative housing society made the bank FD, and on bank FD they receive the interest. Is it is received from the member? Answer is no, na? That is the separate income that should be taxable. So that is given in the Madras Gymkhana Club 2010 Madras High Court. Here they are saying that interest earned from investment of surplus fund in the form of the fixed deposit with the institutional member does not satisfy the principle of mutuality and hence cannot be claimed as exempt on this ground. Now guys, there is a one case law, that is Anil Hardware, but this case law we already discussed in the partnership firm account. In the partnership firm, we have discussed that, suppose guys, partner remuneration interest is allowed if it is authorized by the deed. Authorized means suppose any manner is mentioned. If any manner is mentioned, then also it will be treated as authorized by the deed or not. Answer is yes. So here, where the partnership deed does not specify the remuneration payable to each individual working partner, but lays down the manner of fixing the remuneration, then assessee firm would be entitled to deduction in respect of the remuneration paid to the partner. Last case law is a Trans-Asian Shipping Service Private Limited Supreme Court judgment 2016. Now guys, what happened? You know that we have discussed one topic that was a tonnage taxation. Tonnage taxation is one topic. And in the tonnage taxation topic, if you remember, then in tonnage taxation, your income was taxable on the basis of the tonnage. Means for that ship, what are the total tonnage, and on the basis of that total tonnage, we calculate the income. For first 1,000 ton, what will be the income, and also slab rate wise, there was an income. Now that tonnage taxation scheme is applicable only when you are having one qualifying ship. Means at least you should have one ship. Then only that tonnage taxation scheme is applicable. If you don't have the ship, then tonnage taxation scheme is not applicable. Now guys, what happened? You are having one ship, but along with that, suppose you charter the another ship also, that is called slot chartering. Means suppose I can take an example. My company is one company, that is the shipping company. We are having one ship. Means we are having this one ship, we are having the ship. But suppose many times what happened, in the another ship, we just use the some space in the another ship also. We are having one ship, but in the another ship, we have used some space. That is called your slot chartering. Means slot, you have hired the slot. So question is that if slot chartering and you are having the income, you are doing that activity also, along with you are having the ship. Question is that on that also is tonnage taxation scheme is applicable or not? Answer is yes, guys. Answer is yes. So here Supreme Court says that slot, if you are having the ship, at least you are having the one qualifying ship, and also you are slot charter in the another ship, then you can apply for the tonnage taxation scheme, and even on the slot chartering income, you can get the benefit of tonnage taxation scheme. So here, income generated from qualifying ship is eligible for tax as per tonnage taxation scheme. Yes, since it has exercised the requisite option in this behalf and submitted a valid certificate in respect of such qualifying ship. In addition to the income from qualifying ship, what assessee is doing, it has also earned income from the slot charter. Slot charter means they have booked the slot in the another ship. Arrangement in the other ship. Supreme Court noted that company would regard as operating a ship if it's operate any ship, whether owned or chartered by it. An arrangement such as slot charter or a space charter or joint charter. Thus, even the arrangement of such a slot charter would be regarded as operating a ship. Section 115 VG subsection 4 also talk about the deemed tonnage. And explanation mentioned that purchase of such slot charter shall also be treated as deemed tonnage. Supreme Court held that the requirement of producing a certificate would not apply when the entire ship is not chartered and the arrangement pertain only to purchase of slots. Accordingly, income from slot charter arrangement in other ship can computed applying the special provision as per the tonnage taxation scheme. So for that income also tonnage taxation scheme is applicable. Now guys, there are only two sections are pending. Today we will not do this two section because it will take lots of time today. You are already exhausted. We'll do on the Monday. So guys, we have completed this topic. Now your all topic in this volume is completed except tax audit. Tax audit lecture I will give you after 15-20 days mostly. After 15-20 days, because I have to just do some R&D, how much they can cover in your examination for the tax audit. Tax audit basically. Tax audit topic I will give you after 15-20 days. But tax audit lecture I will give you in the later part from this volume. Otherwise, this volume is completed except this 2 point. Now in the second volume, in the NR taxation, 3 topics, small topic are pending, and in NR taxation is pending. Some part of NR taxation is pending. That we will do. And in the first volume, nothing is pending. In first volume, nothing is pending. In the math topic, one part is pending. In the math topic, one small amendment part was pending. In the math topic, yes, and there are 2-3 correction are pending. So that we will do. So guys, on the Monday mostly, we will complete this 2 section we will complete, and after that on the Monday just carry that volume 1-2 also. With that volume 1-2 means that international taxation part and that computation part, first volume also, because there will be some correction that we will do. Monday you will have the lecture, but after Monday, obviously everything will not be completed on the Monday. So after Monday also there will be a 2 lecture mostly. But that 2 lecture I will not take on the Tuesday, Wednesday, Thursday, Friday, because I am not available for the 5 days. So there may be possibility if you wish to take the live lecture, then I will take on that weekend, means next weekend. Otherwise, I will give you recorded lecture. I will see that because on the last lecture I will guide you also how to prepare for examination, how to handle the DT paper and all. So I will guide you. So I will try to either Monday we will have the lecture. Sunday you don't have the lecture, enjoy the match and all. Monday you will have the lecture, and Monday we will try to complete obviously we will complete this 2 section, as well as we will try to take some international taxation part, pending part. And after that 5 days I am not available in Mumbai. So after that we'll complete 2 lectures. Okay. We'll see, no problem. Thanks a lot, people. That's enough for today from my side. See you on the Monday. So whatever penalty topic we have completed today, just revise the penalty topic. And after revision of the penalty topic, just do the remaining question from the penalty topic. Okay. Thanks a lot. And in penalty topic, there may be some like a penalty. If you are not aware, then just read whatever question and answer is given. Okay. Thanks a lot, people. That's enough for today from my side. Bye. Take care. See you on Monday. Bye.